For those of you that don't know me very well, I'm simple, both in the way I conduct things and in the mind, some would say. So, my 10 minutes isn't massively exciting because there isn't a lot of excitement within a mortgage. It's a loan that allows you to secure a property to live in, basically. So what I'm going to do is start from the very beginning, give you a little brief on my background, and also then talk a little bit about mortgages.
Only the clean bits.
The clean bits. I tell people that I've been in financial services for 30 years. That's not quite true. It's 28 years. I started off with a company called Britannic Assurance. If any of you have heard of that.
Yeah, good old Britannic.
The good old Brit.
Yeah.
Home service company. Used to collect the £1 a week off people, go collecting on a Friday and a Monday and set your business appointments up, and you go back during the week to write your business. Very, very simple process. My book at the time was worth about £1,000 a week. So that's, if I collected the whole book and nothing but the book, I would collect £1,000. You'd get surrenders and maturities. My job was simple. If I'd got £5 or £6 coming off that week, I had to write £6 or £7 to cover the book and go forward. Very, very simple job. The Brit closed their office in Rugby, and I went with the office manager. We both decided to move to Allied Dunbar, so I had a couple of years at Allied Dunbar. So I'd got home service experience, dealing directly with clients and generating the business through your client base, and I moved on to direct sales, as it was known, with Dunbar, who were affectionately known in the trade as Allied Crowbar.
Correct.
Their selling methods, very Americanized, as I think when you look and you talk to business coaches, there's a lot of American influence in how we generate business. I don't necessarily like it, but I learnt a lot at Dunbar, especially when you're hanging with nothing to hang on to and you've got to generate an income. Some of their techniques weren't brilliant, but you take the good bits and you leave the bad bits behind. After about 2 years there, a guy that I'd worked with previously at the Brit and that worked at Dunbar at the same time as I did, went back to the Brit, was a sales manager with them, and he came after me for about 6 months until I eventually went back to the Brit, but working out of the Leamington office. My business sense, or let's say my judgment for moving to different jobs, seems to be just a little bit off key. Because I went back to the Brit for 2 years, had a great time, actually loved it, and had some serious benefit of working for Allied Dunbar that I transferred into the debits, and I was okay. I was number one in the team. Did a lot of the training within the team because of my experience at Dunbar, and I was really comfortable there. You know, as anybody knows, if you're doing okay, you get left alone and you can just get on with it and do what you want. That's what I like. But they decided to get rid of the field staff after a couple of years, so all made redundant. Although I didn't. What I did, this is where I'm not very good. I got a job with a training and development company called Fern Training and Development in Leicester. My job was to work on a business contract and take the business contract, talk to small businesses, help them get their fundings and things like that. That was going to be ideal because it was going to get me out of financial services and start into what I really wanted to do, which was genuinely help people. It's part of my nature, and anyone that knows me reasonably well, it's more about helping people. If you can get a living, great. I ended up on a disability contract because the business contract that I was actually employed for was one of the tenders, and they hadn't got it. So the disability contract was people with disabilities getting back into the workplace, and that was either physical or mental disabilities. People have been out of work for a long, long time, getting them back into work. And my job, when employment services had taken them as far as they could, my job was I'd interview the client, and it would even be down to, where do you want to work? And if the guy says, I want to work over there with him, that's who I'd go and approach. And it was all programmed. You'd talk to the people you needed to talk to. There was obviously funding for that. They would get paid. And the object of the exercise was to get them a job at the end of it. And I had a 30% strike rate, which was really, really good. And one of my best personal achievements was I got a guy into Mind, which it was 6 interviews to actually get him a work placement, but they ended up taking him on as a paid employee. And it was just so good to see. They really appreciated the fact that we'd worked hard, and I'd worked with the employer and with the candidate to make sure that everybody was happy, and that was probably my best one. Anyway, I didn't realise at the time that those contracts again were all tendered for, so they get them for like 18 months and then it's put out to tender again. Fern lost a lot of contracts, most of us were made redundant. The staff were great, the management not so. Anyway, going back to type, I ended up going to Lloyds Bank. I was at Lloyds Bank 2 years as a consultant. Again, with law changes, regulation, they stripped down the financial consultants by 2/3. I wasn't a big hitter because my nature didn't dictate. I didn't take very kindly to the way they did their business, but I needed a job. But they put me into retail management. So I ended up as a bank manager with Lloyds Bank for 6 years. And again, my timing, absolutely fantastic. I'd got so fed up with my 5 to 5 phone call having to justify why the sellers in the branch hadn't missold loans to people, missold home, you know, why didn't old Doris have a home insurance, why didn't so-and-so have PPI. And it came to a head one Tuesday afternoon. The boss from area came over. Basically, we had a conversation, and he didn't ask me to help. He basically told me if I couldn't do what he demanded, then he would question whether I was good enough to be in his team. Didn't like the situation anyway, didn't like the practices. I resigned the next day. Now that was on about the 2nd of March. So I did my notice to become a mortgage broker, worked till the 31st of March, and then on the 1st of April 2008, 2008, 1st of April, I became Rugby's premier mortgage broker, which was fantastic for all the people that know me, obviously. My timing, though,
Wasn't very good.
perfection. Because guess what happened on the 5th of April 2008? The whole market collapsed. So I was probably the one and only mortgage broking lorry driver. I took a job, I did quite a lot of life cover. People that I've worked with over the years, because I've still got Brick clients come back to me now, and I've got Lloyd's clients come back to me now, and I've got Dunbar clients come back to me now. So very, very fortunately, people were always in touch. It's just that I didn't have any mortgages to sell because there weren't any. They'd shut down the whole industry. So I was doing life assurance and driving lorries and van driving. I was doing whatever I could to make ends meet. After 2 years of doing that, and the market started to come back, there were mortgages on the market, very expensive, very difficult to get through. Lending criteria were quite hard. And now we're 10 years forward. All of the business I conduct is on referral. I don't advertise. This is the only networking meeting I do, and it's because I like you lot. I enjoy coming here, and I like you lot.
See how sincere you can be. I wish we could say the same, Steve.
Pulling at the heartstrings.
Listen, you've got to have something to focus on, and if that's me, yeah. So yeah, this is the only networking meeting I do. I don't advertise. The reason I wanted to try and generate referral business was the key issue is I'm lazy, and I'd had at that time I'd had 18 years of chasing target, phoning, prospecting, banging doors. When I started at the Brit, I'd go around, and my debit was Newbold and Lutterworth, my first ever debit. I'd go around in the summer and you'd wander around and just tricks of the trade, you'd be looking in the gardens for kids' toys, you'd be looking in bedroom windows to see if there was kids' bedrooms. So you can knock the door and say, would you like to do a savings plan for your child? It was, yeah, but that's what you did at the time. I mean, it's all old hat now, and we all get the 6 o'clock phone calls, and you think, what's going on? Do we need that? So that's where we got to, and now my business is all referral, and I don't prospect, and I'm never going to get rich because of the way I conduct. But that is basically it. The mortgage market is fairly buoyant at the moment. There are some really, really good deals. I mean, I'm looking at 5-year deals with no fees. If you've got more than, say, 10% deposit, 15% deposit of equity, like remortgage deals, 2.6. Any of you that have had a mortgage for any length of time that can perhaps remember the 17% days, if you can, like now, you get a 5-year fixed for 2.5% to 3%, it's happy days. 2-year mortgages, you're looking at under 2%. There's some really, really good deals out there, some really good fee-free deals, and if anybody needs to get any information on a mortgage, I am now 10 years in, quite experienced, and happy to help. I don't charge fees, so I'm more than happy to speak to anyone that needs speaking to, because I feel that if you treat people properly, they respond in the right way. Yeah. And that's about it, really, about me. I won't go too much into detail.
How many times were you made redundant then, Stu?
I've only ever been made redundant once. I jumped once, made redundant. That was coming. Idiot. I went to Fern. I really, really loved the job. I just got a lot of kicks out of knowing that at the end result, you were helping someone. I try and use that for that with the mortgages, because at the end of the day, you get somebody a good mortgage or you sort somebody out, you are helping them, but it doesn't quite feel the same as a real, helping people properly, because I get paid for it. I know I got paid at the firm, but yeah, I mean, but it's a living.
Any other questions?
Steve, a two-part question here, not a trick question, but going back to the days when I was working in banking myself, is there a limit to the amount of money now that building societies and banks can lend? Is there any financial limitation on the volume of money that they can lend? Now, the second part of the question, because it's not a trick question, is if there is a limit on the amount that these companies can lend, as there used to be under the old Building Society and Banking Act, they had a kind of proportionate amount between, on the capital allowance and the bank sheet. If that is the case, what is going to happen with these millions of houses that are being built, all of which will need mortgages? Are the funds going to run out?
It's Russian money, isn't it?
I can't see the funds running out, and most banks, most financial institutions now have to have an asset risk ratio. So they've got to be able to cover debt with their own resource. They'll lend out money, obviously, that people are putting in, but they still need to have a certain element of covering that, because if you, as an investor, wanted to draw your money out, it's got to be available to you.
So there is not a finite limit. There is going to be a point where they're going to say our ratios.
Well, they can only lend within.
They'll start putting savings rates up to encourage people to put money into the bank to increase their capital assets so they can lend it out again.
The finite limit is their risk ratio.
Yeah.
They can only lend it if they meet the criteria, so they can only lend it if they've got it.
Yeah, and also they've got their criteria now compared to years ago is a lot more stricter, so that they've actually, what the money they're lending, they're more likely to, they're going to get that back. It's not sort of, oh yes, you can have it, you can have it, you can have it.
And those new houses, Dave, they're going to be bought by entrepreneurs who are going to rent them out.
Yeah.
Yes. Aviva being a key one.
Well, whatever. But that's what happened to most of them.
You look at the mortgage market now, there are certain types of mortgage that have been discontinued, interest only. You can get them, but the criteria is quite strict, and again the risk ratios are quite strict. So when you look at people borrowing with this responsible lending, the criteria, in my opinion, can sometimes be a little bit strict for people, because they can so obviously afford it. And a good example would be somebody renting at $795 a month, looking for a mortgage at $650 a month, being told they can't afford it, but they've been renting at that for the last 2 years. But what people don't understand is, let's say I'm looking at a mortgage case now, somebody wants to borrow 150, it's going to cost them 700 quid a month, and they're paying £1,000 a month in rent. They're going to look at me and say, why are you telling me I can't afford this? It's not what the mortgage is going to cost you, it's what it's factored at. So if you look at somebody like Barclays, they're not interested that their rate for that particular mortgage is 2% now. They're going to look at it as if it's a 5.5% rate. So although it's costing 700, that's what it is, that's the hard line today, they're actually saying, well, at 5.5%, it's going to cost 1,400. Can you afford 1,400? And they're sort of working out what it could possibly go to. If you can't afford what it could possibly go to, then it's not affordable.
So let's say, Steve, if there's a 10-year fixed rate about, do they actually lend more against that, or does they still say in 11 years' time the interest rate might be that?
They would work on today's factoring.
So if you take a
So it's
really
today's
long
criteria.
fixed rate deal,
Yeah,
would you get more than if you took a 2-year fixed rate deal?
you would pay more, but you wouldn't necessarily get more as as a lend. And
So
the real frustrating bit on this one is that HSBC, I think they are going to sort it out. I'm sure they are. But if someone's got a basic of 25,000 and they've done £5,000 worth of overtime this year, which is proven on their pay slips, they will ask for 2 years P60s, 2 years historic P60s. And if that guy hasn't earned 30 grand 2 years ago and last year, they'll say we can only take his basic. But what they won't do, if I say, well, this guy's been progressing through the company, and actually 2 years ago he was on 15 grand, but he's been promoted. So what you're asking for is totally irrelevant to prove earnings. But I can tell you in the last 2 years he's been promoted, so next year he'll get promoted and he'll be on 40 grand. That won't be taken into account. It's the here and now, and it doesn't make sense how it's worked out, because as we all know, there's no guarantees. There's no jobs for life. And what I do find difficult sometimes is self-employed people, and you can look around the room here, if we experience difficult times, we change, we adapt, and we do something about it. If you've worked in a factory for the last 20 years and you get made redundant tomorrow, your reaction time is probably a lot slower than it would have been for anybody else in this room. Yet you're a better risk. I'm not quite sure on that. So, but they can only work on a here and now. And when I talk to people and try and put it in plain black and white, that's exactly how the lender sees it. It's plain black and white.
They don't look at your ability to pay, because I can't remortgage because I can't afford my mortgage. The fact that I've paid it for 10 years, why is that not relevant? I can afford it, otherwise I would have defaulted. But they don't look at your track record.
Because under responsible lending, if for any time you defaulted, and you would get some smart lawyer turning around saying, well, on paper that was unaffordable, even though you'd been paying it, so you tell them it's their fault.
It just means that you're stuck in the mortgage deal you've got.
Yes.
Which is awful, really.
Are you on a variable rate?
No, I'm on a fixed rate and later this year. But the only time I've ever been able to go to anybody else is with the same company, because nobody will touch me. Because I'm not,
Yeah, I've got that
I can't
situation.
afford my mortgage, according to the bank. In theory.
The thing is, what you need to do is keep on top, and the only advice I can give you is keep on top of it. 3 months before your deal's due to end, straight onto them, see what they've got to offer,
Yeah,
because it's going to be better than the variable rate.
Yeah,
Whatever
I-
you can get will be
I
better
just
than
think
the variable rate.
It's a con. They give you a mortgage and then you're tied into them because nobody else will touch you. I think it should be based on your track record. Because if you're self-employed, you do the absolute minimum
The-
to pay tax, therefore your earnings
The,
not
the only problem with that, Denise, is if you say I'm going to base this purely on track record,
Yeah.
there'd be an awful lot of people out there that experienced hard times that possibly through no fault of their own that now would not be eligible for mortgages. So the frustration is you've got somebody that, let's say, couldn't get a mortgage 4 years ago but can now because they've sorted themselves out, but they won't go back on track record.
If you work for somebody else, it's easy. If you self-employed,
As a society, are we heading down the road of people having rentals rather than purchasing a house?
No, because
I think people still want to buy.
Sorry, it's cut back.
It's those that are in the position to buy will. The rental market, and this is only my opinion, the rental market is getting very close to plateauing because you can only charge so much. It's a little bit like the housing market. My great friends and special colleagues and companions, the estate agents, they obviously need to get as much as they can for the property. If they're charging you 1%,
Unless they're buying it themselves,
Yeah.
of course.
Then it's
then it's a
changes.
different story.
But you know, the housing market at the moment, it's getting, in my opinion, it's getting close to a peak because once you've priced people out,
Yeah.
the bubble bursts. Rental market, you know, people still have to be able to afford it and live. So you can only push them so far. And then in true British nature, push us too far and the poles will push back.
And on that happy note, ladies and
Yeah.
gentlemen. Right, thank you very much.